Hello and happy Friday on this fine March 8th, 2024. My name is Tyler Wood. I am a CMT charter holder, and as always, I am joined by the Chief of Charts here at GoNoGo, Mr. Alex Cole. How you doing, my friend?
Fabulous. Sun is shining. It's finally stopped raining.
Thank goodness for that. I'm finally home. Had an amazing time at the CMT Association 2024 Summit in Dubai last week. A lot of experts from around the world, great sell-side analysts, phenomenal money managers, a lot of conversation about the markets. And on today's show, like always, we're going to focus on price and trend, get away from some of the narrative that might be distracting to all of us. Alex, let's start with our cross-asset heat map. Let's take a look at the asset classes first and foremost, just kind of get a sense of what is trending, the environment that we are all trading through. I'm seeing a lot of blues and greens. Talk to us.
Yeah, we're looking all right. You know, we've come out of the NoGo in Treasury bond prices as well, which was the only one that's been sort of holding on to that bearish trend over the last couple of weeks. And we've got blues in the top panel, equities, Treasury bond prices, commodities. They fluctuated, struggled a little bit earlier on in the week, but are now painting aqua bars. And the dollar's the only one now flashing some uncertainty with that amber bar. So that's one to look at as we go through the show.
Absolutely. We're going to talk about a lot of things today, from the top level asset class into sector groups, into industry groups within those sectors. Some pretty exciting new leadership coming out of industrials and materials that we'll get to in just a minute. But let's talk first and foremost about the S&P 500, just a traditional GoNoGo chart. Let's see what this unstoppable rally has been showing us over the last few weeks.
It's been showing blue bars, I can tell you that. We've got another new high this week, really just stepping up through that trend. You can see how we've made a series of higher highs and higher lows. Every time we think there might be a pause, it's very, very brief. We saw the last Go counter trend correction icon, this red triangle on Monday, told us that price may struggle in the short term to go higher. It did for all of 2 days. And then we've gone higher again. So now we're on strong blue Go bars. Trend is strong. Oscillator didn't get to zero this time, turned right back around. We're right at that value of 3. And so we're in a healthy trend, a healthy Go trend, and positive volume confirming the direction of the trend.
Absolutely. And if you're new to GoNoGo charts, just to break this down for you, what we're doing in the top panel of that price action is blending all of the most tried and true, the heavily used and widely back-tested tools for identifying trend. We're taking all the information from those indicators, but blending it in the background to give ourselves a color-coded but more simplified version of understanding trend without all of that clutter from endless indicators. And of course, in the bottom panel, we want to do the same methodology of blending lots of different tools to get the weight of the evidence from a momentum perspective. But we've also included volume. So we're seeing that line move from green to blue, the blue indicating heavy relative volume. And then, of course, what we're not seeing right now are max squeezes and that volatility compression that's so key to many of us who've been trading for a while, understanding that Keltner channels, Bollinger Bands can give us a really powerful insight for trend exhaustion, trend reversal, or trend continuation. So that's all of the technical perspective in a simplified chart. And Alex, when I see this trend in the S&P 500, that interplay between momentum and price really just jumps off the screen. And so when we are seeing markets continue higher, we're seeing that GoNoGo Oscillator move from an overbought level, which is not a sell signal, but we're seeing those red triangles letting us know that we've reached a peak in momentum, and that it would likely calm down, but where it gets to the zero line and finds support, where we don't see oversold momentum, we're seeing those trend continuation icons that you're highlighting there, the green circles being that more objective lens for when we do want to find viable dips. So Alex, let's jump back to a few of those, the big intermarket picture. Let's take a look at the TNX. You mentioned Treasury bonds back in a Go trend. So Treasury bond buying is going to move inverse to the 10-year Treasury yield, the rates, and we're back in no-go conditions. Talk to us about what you're seeing on this chart.
Yeah, well, what we've seen in equities really has flown in the face of this go trend in rates over the past month or so. And so for the rates to roll back over now and paint a no-go bar can only be really a good sign, I suppose, for equities in the near term. So we're seeing it fell out of the go trend, painted a couple of amber bars of uncertainty. Those, remember, are go fish bars. And then a no-go has come in on the current bar. And look at the oscillator, Tyler. After that period of weakness, we see the oscillator ride the zero line. And that tells us that there was very little directional momentum there. You mentioned the volatility squeezes. This is a small one, just building up over a few days, but broken then into negative territory before the trend gave way to those amber bars. And now, of course, the no-go. So now we're in a new no-go trend, and momentum is confirming the direction of that trend by being in negative territory.
Oversold momentum in a no-go trend. Certainly a lot of speculation by the market and market participants about the anticipation of multiple rate cuts by Fed Chairman Jerome Powell. A lot of the commentary that I heard last week in Dubai was, why would the Fed be cutting 6 times this year when the economy is thriving? We're seeing good jobs numbers. Inflation is not it's certainly not out of the system. And so if we were to see 6 cuts, it would probably be in reaction to some deep troubles and recession. But of course, here at GoNoGo Charts, we try to steer away from speculation about what may or may not happen by the powers that be, and instead just look at what is actually happening, which could give us a huge advantage. And that's to look at price. So, Alex, let's shift our eye from the TNX. Let's take a look at UUP, which is a proxy for the dollar index. It is an ETF, which also gives us some insight around volume. A lot of commentary around the US dollar as well. A lot of geopolitical tensions around the world, and commentators from international backgrounds giving some pretty unique insights. From a price perspective, what are you seeing here on the dollar index?
Yeah, there's a lot to sort of go through, I guess, as quickly and as simply as possible here. But you can see that this latest go trend in the dollar ran right up against resistance here from prior highs. You can see where I have my track mouse. Hopefully you can see that thrown back on the chart here to these previous highs that really acted as some resistance. The dollar then weakened. We saw the counter trend correction icon. We saw the GoNoGo Trend paint weaker aqua bars. And we saw the oscillator then fall to the zero line. And we know that if this latest go trend was going to be healthy, we would want to see support there at zero. It didn't find it. It broke into negative territory, retested it quickly, and then again breaking down now out of a small go-no-go squeeze before the trend changed really quickly down into oversold territory. So that told us that this trend was in real trouble. And then, of course, now we're painting an amber bar. So we'll see what happens next. Those amber bars often come as transitionary periods between trends. So we'll see what happens. Will we go into a no-go from here? Or will we recover back into a go trend? To me, it looks as if there's some really sort of bearish sentiment around the dollar, like you said, with some of the geopolitical situations. And like with the TNX, I mean, falling rates and a falling dollar are typically good things for equity markets.
Absolutely. We also know there's a strong correlation or inverse correlation between what's happening in the US dollar and what's happening with our shiny friend gold. Let's pull up a chart of gold. Certainly, as we've commented on this GoNoGo show for months and months, this key 2,000 level per ounce of gold was very strong overhead resistance, and we saw repeated tests of these levels. But the commentary that really stuck with me from last week's conference was the idea that at each time we met with resistance and sold off, it was selling off to ever higher levels, meaning we were making higher lows even though we had this this ceiling. And so that tightening coil of the trading range was eventually going to break. And I think we do have a decisive break on this chart. Talk to us a little bit, Alex, about what we're seeing from a go trend perspective.
Yeah, I mean, and we can throw this back to a long-term chart if you want, Tyler. But what you're talking about is this over a decade-long pattern that gold has been trying to come out of, which is, of course, those resistance levels that you spoke about. But if you look at this on a daily chart, falling away from these levels, we really didn't fall away at all. I mean, if you look at this in the grand scheme of things and you put it into context of a decade-long period, falling away here is almost nothing. And you see that we've already made significant higher highs and higher lows. And now this correction really just went sideways. So a new go trend, strong go bars, a really quick movement now decisively above those levels, and momentum above zero in overbought territory, of course. So enthusiasm on this move. And we'll see if we can consolidate. What we'll be looking for next, of course, is to consolidate at these levels and not fall back below them.
Absolutely. Let's step this out first to a weekly time frame. And for all watchers of this Go No Go show, you know that we believe every technical tool should work in the same way across every time frame. So our calculations don't change. It's just the periodicity that changes. And look at that strong weekly bar this week above prior resistance, really solidifying this move for gold. And then let's jump it out to a monthly and get a little more historical perspective.
Yeah, and this is, of course, the pattern that everybody's been looking at, going back to that high in 2011. We've made this massive sort of, we can call it the cup and handle, but really it's this huge basing pattern that's now led into this right side of the pattern where we've seen that resistance over and over again at these levels. And this is the first time where you could really see a clear break. Of course, there's a few hours left in the week, but if this close is anywhere near here, then we are definitely talking about a break above, in my opinion, that close being significantly higher. And that hasn't happened before. You can see how we had interweek highs, but then we've come back down to close right around those resistance levels. The same thing here. We had a high during the week, and then we came back and closed a high during the month, and then came back and closed. I forgot for a minute, we're talking about monthly bars. So this is a monthly high, and we're looking at a monthly close that would be significantly higher. So, very important at the moment.
Absolutely. And it's above all prior resistance. We know that's extremely bullish. We don't have overhead resistance. So price projections for folks on where gold could head is certainly much higher. Let's take a look at digital gold, Alex. We have a crypto realm map that shows the top 4 cryptocurrencies by market cap relative to the S&P 500. While we were in Dubai Wednesday night, Bitcoin broke through 60,000, and a lot of commentary about a parabolic move, potential for it to crack and roll over. And certainly we did see a small retracement, I think 1% on Bitcoin. But even against the S&P 500, these 4 are outperforming a rising equity market here in the US. The top panel now showing top panel S&P 500. We're seeing that rally. These are relative outperformers, meaning they are outpacing the rally in US equities, which is important to note, right? We want outperformance and trending higher. So we're seeing that for all 4 of these cryptocurrencies. Alex, you were pulling up that Bitcoin chart. Let's go back to a plain old Go No Go chart and take a look at Bitcoin a little more closely.
I was just trying to keep you on your toes and
I love it. It's
try to fool you and make sure you knew what we were talking about. But yeah, amazing to see this outperformance when you see the performance of the S&P in the top panel. It's quite amazing.
Yeah.
All right, so
live theater is never a bad thing, right?
Yeah.
Improv.
Yeah. So let's go to that Bitcoin chart on its own. Oops. Got to get the dollar sign in there. Okay, so here we are on the Bitcoin chart. You can see that move you said came back a little bit, but just like with the equity markets at the moment, you get the counter trend correction icon. You get a little bit of maybe a couple of bars of weakness, but really no damage done. And then back to the strong blue bar now, testing those highs again. So it was really a one-day move. People probably taking vast amounts of profit. And then now we are back in the strong blue bars of a go trend, and you can see how really what a performer it's been. We had that correction that brought about some no-go bars and some sideways movement, but once we got back above the zero line, back into that go trend, now we've really seen trend continuation, and this is where we are now.
And a lot of the commentary from money managers that you and I work with, and even from some of the speakers at the conference last week, was the idea that many of us have this behavioral impulse that tells us we've missed the move, right?
Right.
And it doesn't matter what ticker symbol we've got up on screen. You see something in a Go trend and you think, I missed it. I should have gotten in when it was lower. And that fallacy can be really damaging to your portfolio. Certainly for trend following investors, finding a sensible time to get in to these trends might be where we retest the zero line and kind of retracement or pullback. But certainly above this breakout point, getting into something that is trending is always a good idea.
Mm-hmm.
Brilliant. So let's move on. Let's take a look at U.S. oil. A lot of conversation about the transition to renewable sources away from fossil fuels throughout the GCC region from a number of our attendees and a lot of the meetings that I've been having over the last month. But certainly what we're seeing in oil is important to pay attention to from a price and trend perspective as well.
Yeah.
Retesting that zero line back in Go trends, yes?
Yeah, higher high. We've made a higher low in a Go trend. We've made a higher high, and now we're back retesting the zero line. If we find support here, this will be another higher low. So we'll watch this zero line, and if we can find support here, this is the max squeeze, Tyler, that we were talking about before. This was a really drawn out one that when it resolved, it told us that there'd been quite a lot of thought going into this. Really, what a long time of this neutral momentum readings that gives us this max squeeze, and then it was broken. And a new Go trend in place, and so far has been finding support now at the zero line. So we'll watch closely here. If we can find support here and rally back into positive territory, we'll have probably set a new higher low, and we'll probably be looking at an attempt to make a new higher high as well.
And let's take a look at this on the weekly basis as well, just to have that multiple time frame perspective on where we've come from. Certainly not a runaway rally yet, still decisively within that range, but at least for the shorter term on that daily chart, looks like the bottom is in and we're back into trending conditions.
Yeah, I mean, this is when we like to we try really hard to get the technical perspective, but keep the chart simple, because this just jumps off. You can do your traditional trend line analysis. And I was looking at this chart a few weeks ago when we broke out of this really sort of slow meandering NoGo trend lower. It was on a max squeeze. We entered a Go trend, and then we came right back down to that level and found support. So very, very interesting. Obviously, a ton of uncertainty on the larger time frame. This is a lot of amber bars sprinkled in with a couple of more of the negative colors. But again, now breaking out of a squeeze into positive territory on amber bars with the daily chart as well at an inflection point. We'll be paying attention here. If the daily chart resolves higher and finds support at the zero line, that'll put some pressure on this chart to continue moving higher as well. We've got positive momentum on our side and a higher low here that found support at the downward sloping trend line. So next sort of obvious case would be if that all happens, to then target these highs to potentially take those out.
Yeah, move up to retest what will be overhead supply at those prior highs. Fantastic. So we have some understanding of the macro environment, pressure easing on the interest rates. We're seeing U.S. equities in a Go trend. We're seeing cryptocurrencies outperform, seeing a little weakness in the U.S. dollar, and some resilience here in oil. Major breakout in gold. Let's take a look at the S&P 500 from a sector perspective, and take a look at what's leading us higher. And I think this is really where equity investors are spending most of their time, is trying to understand that rotation between sectors and trying to make sure that we are overweighting and paying attention to new leadership groups. I know in the last several weeks, there's been endless discussion of perhaps amateur or new technicians talking about the narrowness of breadth, and that it's only the Magnificent Seven, now maybe Mag 5, as the tech giants begin to roll over. We were talking about this at the end of last year, that on an equal weight basis, the bull market rally hadn't really found its way into the hands of smaller and mid-cap companies, a more diversified approach, but that even if the index itself wasn't making, striving to new highs, that we could still see some of this rotation, which is the lifeblood of bull markets, as Ralph Acapora has taught us. And here, sure enough, we're seeing that rotation. Alex, walk us through when we're looking at these on a relative basis. It's each sector against the benchmark, just a simple ratio chart, and we're looking at the colors of the GoNoGo trend. I'm seeing more of our cyclical sectors pop out.
Yeah, for the longest time into the beginnings of this year, we were seeing it very thin, and it was mostly for these couple of months. It was a couple of these growth sectors, like you said. Now they've rolled over, but we've replaced that leadership with some of these more sort of economically driven sectors, such as financials for a few weeks, and then of course industrials and materials. Financials keeps trying to sort of flip back and forth here between weak NoGo and amber. So financials trying to hang on to some of that outperformance as well, but definitely the outperformance this week, at the end of this week, coming from industrials and materials. And we spotted industrials a couple of weeks ago. So, I really couldn't stress that as much or enough at what you said before, that it's the rotation amongst these sectors that can continue a bull market. And so that's very interesting to see now, this rotation into some of these other sectors, and we'll see how that plays out.
Absolutely, and even within financials, as you and I were commenting several weeks ago, the broker dealers, specialty finance, insurance, property and casualty, these are industry groups that are really outperforming. Great looking charts from a technical perspective, but of course the XLF includes all of the banks and everything else in there. So we'll take a look at a few of those financials charts, but I really want to focus on kind of the next step of our process when we're doing this top-down approach, which is to get into the industry groups. And why don't we take a look at the materials sector, which is currently the only sector that is in a strong blue go of outperformance against the S&P 500. And when we get into the industry groups that comprise that sector, we can also see there is some narrowness to the leadership groups that are bringing that sector higher. What is leading from an industry group perspective in materials are twofold. One is paper companies and commodity chemicals, so industrial chemicals manufacturers that are driving that trend higher for materials. Fascinating companies, probably not the first thing that you hear about on financial news media, but let's take a look at a few of those. Alex, why don't we start with a couple of chemicals companies? We'll start at the large cap, perhaps some familiar names, with a chart of Dow Chemical, DOW. Not your dad's Dow Jones Industrial Average, but Dow Chemical.
Yeah, and here you go. You've got that strong go trend back in place, new highs. But again, importantly, the breakout of a max go no go squeeze. So you often see this sort of thought process of the market as it rolls out of its trend, and then we get some period of choppiness, which can be so frustrating. But once that resolves, you can see how we had this narrowing of price action. We had the squeeze with the oscillator riding that zero line as the squeeze built to its max. And then once it was broken, it was retested and then clearly broken into positive territory. That's when that go trend really took shape. So we're going to watch again to see what happens as it approaches the zero line, but strong go trend in place, heavy volume as well, and the oscillator just still in positive territory.
Let's take a look at MTX, another minerals technologies company. This is a mid-cap company, and certainly consolidating here from prior gains, but seeing repeated support at the zero line.
Yeah, and I like the look of these kinds of charts a lot of times because we're consolidating at a level that has been a problem in the past, right? So if you look at this chart, this was their prior high. We rallied up to it and we've found resistance, but we haven't really fallen away from that level. We're consolidating right at that level. And in actual fact, now we are slightly above those prior highs on the last few closes. And then we always talk about this clustering of trend continuation icons. When you see a consolidation in place and multiple tests of the zero line, often that leads to good things as long as it continues, of course. So if we see support again here and the oscillator rally into positive territory, we're going to get another green circle telling us that the trend is likely to continue because we've got, of course, a go trend in place and momentum staying on the side of the trend by remaining in positive territory. So I would love to see support here again. One more continuation icon as we really set up to move higher.
And there's a lot of variety amongst the chemicals companies charts within this industry group. A lot of them are just finishing out some bottoming processes. But I think for all of the naysayers, the bears who didn't believe in this bull market rally and were leaning on the narrowness of leadership as their main point to be bearish on the market, take a look at Linde PLC. It's LIN. This is not a new trend. This has been in shape here for a while, and certainly if we even back it out to a weekly chart, we could see just how consistent this trend has been since the lows in October.
Yeah, absolutely.
Continually finding support at the zero line. Now volume strengthening. Now we're starting to see the money flow into these areas of the market as more and more investors are divesting, coming out of some of their information technology and communication sector holdings into more diverse areas of the market that are showing those signs of trending and outperforming characteristics that we all look for. Alex, let's take a look at a couple of paper companies.
Yeah,
paper was was such an important part of the marketplace and our new leadership group. International Paper Company is the ticker symbol IP.
Yeah, certainly these days, who uses paper, right? I feel like I've forgotten how to write on paper. My hand cramps up. But yeah, new Go trend. You can see that we've entered a Go trend. We've broken out of a very long extended max GoNoGo squeeze. So as long as we continue to find support here, we'll look for this Go trend to challenge these prior highs, the resistance from these prior highs, just over 37. So let's see if this Go trend can survive for another few days and then really make that push.
And let's so that's a large cap. Let's take a look at Glafelter Corporation, GLT, which is just finishing a bottoming process, and perhaps if you even bump that out to a weekly chart.
Yeah. So this is going to be interesting because we always like to talk about the trend being primarily important, and at the moment, the weight of the evidence tells us still in a no-go, but weakening. So we will see new lower low here. We'll want to see if we can put a higher low in. Definitely positive signs, oscillator making that move into positive territory on heavy volume. But we're going to want to see some higher lows and then potentially new highs as we find support going forward.
Absolutely. As with all trends, they're going to take shape first on our shorter time frame charts. And that's what we're seeing on the daily, beginning to break into Go trends, but not yet confirmed on the weekly. What's important is that we've got a very clear risk level to trade against, and at the bottom of that gap, we certainly, or excuse me, the top end of that gap, and what was prior highs in late December, we have a pretty clear risk level to trade against. So good charts to take a look at.
Absolutely.
Alex, as always, one of my favorite parts of the week is coming here onto this GoNoGo show with you to talk through markets. And for all of you viewers here on Stockcharts TV, we really appreciate you spending each week with us and taking some time out away from your trading platform to get a sense of what's happening in the markets. We are announcing some pretty fascinating and exciting changes. All of these shows are going to continue. We'll be with you each week, but we're going to be over on the GoNoGo Charts YouTube channel. We'll make sure to link off of this episode and other activities that we do with Stockcharts TV. But we're certainly not done recording these shows and being there with you in the markets each week. So you can always find that at the GoNoGo Charts YouTube channel. You can also hit our website, GoNoGoCharts.com, for all of the historic webinars and seminars and market commentary, as well as historical research that we've been sending out to all of our institutional subscribers. So a lot of great content still to come. And thank you very much to the Stockcharts community and to David Keller and the producers of Stockcharts TV for having us on. Looking forward to doing a lot of things with Dave and with the team over there, but in a little different format on some of those Stockcharts TV shows. So I hope everybody is enjoying a little bit of springtime weather. And until next week, take care of each other and trade them well.